We need you to know that this is what's going on behind the scenes, how much interest is actually being paid each and every month. And I'm going to show you the math as to why they're doing it so you can understand even deeper. This is the P.I.L.L method masterclass on interest cancellation being done in the mortgage syndicate this morning. And I'm glad that you are here with us all. So what we're talking about, folks, is what is happening every time you make a payment. Now, if you're watching this online, we are taking a look at cumulative principal and cumulative interest. That is all the principal you pay down in 1 year following the bank's program, and all the interest you pay in 1 year following the bank's program. And here it is. Cumulative principal, you pay this loan down by $30,699.86. That's how much you pay down in principal. That is the amount of equity you've just received, $30,000. But how much interest did you pay to get it? Look here, $73,748.14. If you are a real estate investor and you're renting out this commercial property and you're making money, I mean, you're making really good money with the rents coming in. All right. You're making about $15,000 with the rents coming in, and your payment is only $87.04 each month. Listen, that is pretty good cash flow. What the experts are telling you is if you can make this kind of cash flow, then don't worry about anything else because your tenants are paying the bill. Your tenants are paying the bill. Don't pay attention to the interest cost. Let me tell you how dangerous that is. And here's something that you need to clip or write down. Money that you could have made that you didn't make should be considered a loss. I'll repeat that one more time. Money that you could have made that you didn't make should be considered a loss. Watch this while I make that clear to you. Now we're going to go back down to this part right here. So it costs over $73,000 to get $30,000 in equity. So folks, when you add these two together, that's $104,000 that you have been given by your tenants. If this is your building, your tenants gave you $104,000 in 1 year. And what do you have to show for it? $30,000 in equity. Real estate investors, residential homeowners, if somebody gives you $104,000 in 1 year and all you have to show for it is $30,000 that you can actually benefit from, is that the kind of transaction you want to continue to make? Duncan says, no. Vonda says, no, that's not what we want to do. If you want to know what to do about this, I'm going to give you something that is simple to do. It's not what we do here at the P.I.L.L method, but you need to understand how these loans work. This is actually a client of mine. And what I mentioned to him is this. He said, okay, number one, folks, he told me that the majority of the $15,000 that's coming in from this building, okay, the majority of that he wants to put into reinvesting. He wants to reinvest his money. So the first thing real estate investors talk about is, Don, how are you saving money and paying off these loans faster? Would it make more sense to invest that money that we're being given instead of paying down this loan? And I say, continue to invest at the rate you've always invested. I'm going to repeat this. I don't want the money you're using to invest that you're getting from your rents. I don't want it. I don't need it. So if anybody says that this is what we're doing here at the P.I.L.L method, we need to make it very clear that I'm not using the monies that the real estate investors are using to get to the money that they're getting, and we're not using the money that they're supposed to invest. And they're making plenty of money by continuing to invest in other properties. We're not using that money. But every real estate investor I know, this is just one thing you can do amongst many. Okay. What if this real estate investor has some money set aside that they are using to do repairs and maintenance on their building? All right. So now out of that money, all right, they're taking about $2,000 a month and just putting it aside. $2,000 a month and putting it aside. All right. Can you imagine what you could do with that money that's sitting in the bank waiting for something to go wrong? All right. So now this particular real estate investor has several buildings. And out of all the buildings they have, they're putting away $6,000 a month in a reserve fund. And there's over $100,000 in that fund. Over $100,000 in that fund. And they're putting $6,000 a month out of all the money that they're bringing in. Now, between their buildings, they're bringing in over 50 grand a month on these buildings. And when you add up all the mortgage payments, it comes to about $14,000. $14,000 in mortgage payments. All right. And they're bringing in over $50,000 a month. Ooh, that's good. And they're investing most of it, reinvesting most of it right away, but they're putting $6,000 a month in a fund so that they can do repairs and maintenance. That's the setup. So I asked this real estate investor, when you're taking a look at line 12 on your amortization schedule, you're paying this loan down by $30,000 when you add it all up. Here's what I asked. Do you have to give them the bank this money, the $30,000 to pay this loan down with? Do you have to give it to them in 12 monthly installments? Do you have to give it to them at $2,500 and $2,600 at a time? And they said, no. If I wanted to, I could give them the $30,699 at one time. If you did, would you be paid down to line 12 in just 1 month? And they said, yes, I would. And if you're paid down to here in just 1 month, and we pay interest based on the month in balance every month, so you're here in 1 month, so that means you don't have to pay any interest on the payments from line 2 to line 12. No interest payments. That saves 11 $6,000 payments. In fact, they just saved, if you do that, you're paid down to here in 1 month and save $67,661.37 in interest you don't have to pay. Is that better than what the experts are telling you to continue to let the tenants pay this down? All right. And don't pay attention to your interest cost. Just take all the money and invest it. Don't pay any attention to this. Does that make sense to you now that you see what's really going on behind the scenes? So I'm still paying down the $30,000, but it didn't cost me $73,000 to do this. It only cost me $6,203.78. Friends of mine, if you're going to get $30,699.86 in equity, would you rather pay $6,200 to get it or $73,000 to get it? As a real estate investor, does it make sense, even though the tenants are paying the bill, to take $73,000 of the $104,000 that they just gave you to give it away to the bank willy-nilly and not even worry about it? So what happens to the $67,000 that you just gave the bank, that you didn't have to give the bank? Remember that quote I gave you at the beginning? Money that you could have made that you didn't make should be considered a loss. So if I can pay down to here in 1 month and save $67,000 in overall interest I don't have to pay. So here's what just happened. The bank wants $1,122,000 in interest from me. I just lowered that amount by $67,000 that the bank will never get. Is that awesome or what? So if I can save that money to get the same equity, does that mean eventually I could invest the $67,000 that I didn't give the bank and make some compound interest with that $67,000 I did not have to give the bank? And if I gave it to the bank, it makes it impossible for me to make money with that money. Money that you could have made that you didn't make should be considered a loss. I don't want to make money just on the front end from the rents. I want to make money on the back end as well with the interest I did not have to pay the bank.